Hello, welcome to CMC Markets on Thursday the 13th of February and my weekly catch-up with the sales trading desk. Joining me this week is Toby, and the theme, I think the underlying theme this week, Toby, has really been guidance, hasn't it? Forward guidance. We've heard it from Janet Yellen, Humphrey Hawkins on Tuesday, we heard it from Mark Carney yesterday. Interest rates are going to remain low, and equity markets like that, don't they? We've seen that, and the S&P's back up again today, but it's all about earnings at the moment, and I think maybe markets or investors in particular are not liking what they're seeing.
Yeah, on the way down it was a lot to do with emerging markets as well. A lot of fears of that which seem to have, I don't know if they've subsided, but they've certainly
haven't gone away.
Put to one side for now. They're not hitting headlines. In the UK especially, we've had a couple today and in the last sort of week or so that we've had a couple of earnings that missed, and more importantly I think a couple of forecasts which are now starting to paint a slightly more bearish picture.
Let's have a look at Rolls-Royce, because I think that was that was particularly surprising. We've seen a massive decline today.
Well, if you look at the longer term trend, it's a massive outlier because the stock has, I think, trebled since the onset of the financial crisis.
250p it was in 2009.
Yeah, unbelievable performance. But defence cuts, which I suppose shouldn't really be too much of a surprise. But I mean, this is pretty much the biggest one-day loss. I don't know whether it's ever, but it's certainly in years.
Broken the uptrend line that we've drawn in, that I've drawn in there.
Yeah.
It's approaching its 200-week moving average. So it's certainly got scope. Certainly got scope to go lower.
Well, yeah, I mean, in light of the fact that it's been such a good performer as well, it might have been a good time for a bit of profit taking, or maybe a bit of reallocation of resources for people that have been into it long term.
Yeah, sure. It's certainly looking at the position value on our clients. There's been a 7% reduction in cash exposed to that stock today, which I suppose is not
too much of a surprise.
Actually, no, it's not a reduction, it's an increase. So actually people are buying into this drop, which is somewhat surprising when you consider, the break lower that we've seen. Yeah, see, look there, 7% increase in long positions, as opposed to a reduction. So that's me completely misreading the graph.
It depends on the term of the position.
Yeah.
People always come and hunt a stock that gets hammered like that in the short term.
Okay, so what do our clients think with respect to equities in general? Because I think people are starting to get bulled up on it. Interest rates are going to remain low. We're looking at the S&P. We're seeing it start. We've seen it rebound, but we're seeing a bit of selling today. Certainly in the FTSE and the S&P as well.
Yeah, some of that will come from, again, I think, forward projections from some of the corporates. We got very dangerously close to looking like we were breaking out of the trend only last week. And I think people have taken some, there'll be a lot of positives from the fact that we didn't break that trend, and we still remain, fairly well set in terms of that. But
in terms of the FTSE, our clients are
predominantly long. I think sort of about 67% it is for all clients, whereas with I think with US markets it's a slightly different picture.
Yeah, I get the feeling that, I don't know whether this is a widely held belief that maybe US stocks are slightly more expensive.
Yeah, they went up further on the way up. Yeah. They started coming down a bit harder on the way down as well, and yeah, they've certainly outperformed. So certainly, if you look on the short term, then people will maybe be looking, especially with the UK having a slightly rosier outlook certainly from the central bank. Then they might be looking at to outperform in the short term.
Brings me back to cable. Seeing the highest levels today since 2011, those highs at 167.45. What's the prognosis there? Do we think we're going to get further gains? Certainly from the positioning that we're seeing, it's a bit of a squeeze, isn't it?
Well, we've got 167 is the sort of historical level, isn't it? We're still sort of making our way towards it. They look more likely than anyone else to raise rates. It's quite simple, really. Even more so possibly this week as well.
Next week we've got CPI. Mark Carney's basically suggested that rates won't rise much before 2015. Spencer Dale, chief economist, said on Wake Up to Money, I think, or Radio 4 Today programme this morning, that a rate rise in 2015 was not out of the question.
Yeah.
So, it looks like the UK could raise rates before the Federal Reserve. But anyone who's thinking they're going to see a move to 170 could be a choppy ride.
It could be, yeah. And then we had Euro Sterling this week, had a bit of a rough ride as well.
Sharp drop there.
Yeah, negative deposit rate chat again, although we've never really seen anything bear through with that yet. But
Yeah, Denmark have flirted with that, and that's actually caused banks to raise their rates, not cut them, because obviously they need to offset the negative rate. Okay. Anything else you want to cover? Obviously, we saw Tate & Lyle fall very, very sharply today. Unfortunately, I don't have a chart of that. But again, that feeds into the negative.
well, it was the forward projections as well. I think that is a lot of that is in the sucralose, if I say that correctly.
Sugar.
The sweetener.
Left a rather bitter taste.
Yeah, there you go. But it was the pricing, and I think there's a sort of an excess of cheap supply coming out of China, which is putting a lot of pressure on it. So, again, maybe not too much of a surprise, but another corporate coming out and not giving a fantastic outlook.
Okay, so keep an eye on those. Keep an eye out on the forward guidance on company earnings, and not so much the forward guidance on central banks. Okay, well that's pretty much it for this week. Thank you, Toby.
Thank you.
For giving us that insight. That's pretty much it for me this week and Toby. And until next week, this is Michael Houston and Toby from CMC Markets.
Cheers, guys.